Hi, everyone, and welcome to Build Your Business Credit Profile by Vyde and Dun Bradstreet. We are so excited to have you here with us today. My name is Shakria Hall, and I'll be your host and one of your speakers. We also have another Vyde team member joining us today, and that's Danielle Wagner. She's in the background. She'll be off camera, but she'll be providing some much needed tech support in the background. We also have a very special guest joining us. That's Chris Decker from Dun Bradstreet. He is a business development manager over there with quite a bit of experience. So we are very excited to have him joining us today. He has that experience is in helping small businesses build credit, reduce risk, and improve access to capital through smarter financial practices. And before I get into the presentation, Chris, did you have anything else that you wanted to add about yourself, or maybe what the attendees can expect from you today?
Sure. Just a high level overview of things to, build your commercial credit reports, what data to focus on. It's complex yet simple, but we'll get into that. I'm very happy to be here and uh, take part in the partnership and help small businesses any way that we can.
Love it. Thank you. Thank you so
Of
much
course.
for participating. So let's get into some housekeeping items. First, a quick disclaimer. We hope that you find the discussion helpful. This session is for informational purposes only and is not intended to be legal advice. The next one will be our safe harbor policy. So please take a moment to review as I go through some additional housekeeping items. We'll be recording today's event. So if you want to listen to it again or maybe share with a friend, you'll receive the recording within 24 hours. And today's discussion is meant to be very casual and conversational. So although we'll leave some time at the end for questions, if during the presentation you have a question about the content or one of us as presenters, feel free to drop them in the Q&A section, and we'll try our best to address them as we go along. And if we run out of time, we'll follow up with you via email. Now onto the agenda, which Chris captured a little bit of this a while ago, well, a second ago, right? So I'll leave this up while so you can quickly review while I go into some other items that you can look forward to today. So in addition to the content that you see on screen, we have two very short poll questions and one survey at the end. Now these are to help us get a better understanding of you as attendees and what you might need as business owners and your overall satisfaction with today's presentation. And that end of webinar survey, will help us determine the quality of the content. What did you think about the content? What did you think about the topic? And it'll help inform some of the additional events or the future events that we have coming up shortly. And for the next slide, speaking of polls, here's our first of two. So while Danielle can help us get that poll together, we can review the options here. So how long have you been in business? Have you not launched yet? Have you been in business for less than 1 year? Have you been around for 1 to 3 years or 3+ years? Please use the Zoom poll window to answer, and we'll give you a minute or two to respond before we get started. We have quite a few responses coming in. Thank you so much for your participation. I think it would be helpful if we shared the final results before we move on. Okay, so where are we now? Okay, the responses have slowed down a bit, so I think we're at a good time to pause or to stop sharing that. Okay, so when we share this result, it's pretty spaced out, but less than 1 year. Less than 1 year seems to be the bulk here, 45%. Okay, that's really good to know. Danielle, can you help us close the poll out or share it?
Yes.
Okay. Okay, I think we were able to close the poll. So Danielle, are we good?
Yep, everything should be good.
Okay, awesome. So thank you so much again for your responses. And we're about to get into personal versus business credit. What's the difference and why it matters? So for personal credit, most of us are quite familiar with the personal credit side of things. We know that it's tied to your social security number, right? So it's tied to your social and it's intended to reflect how you manage your individual debt and bill payments. And your personal credit is used to access all types of things, right? From utilities and from utilities to more of the hardcore lending type products like personal loans and credit cards, mortgages, and things like that. But we won't get too deep into the personal credit side of things because you're a business owner, right? And we want to get into some of the nuances of business credit. But your personal credit history does affect your business lending abilities early on. And that's because as you are new in your business, you don't have an established business credit history yet. So lenders usually rely heavily on the business owner's personal credit profile when they're evaluating risk. And in many cases, business owners are also required to personally guarantee loans or lines of credit, especially in the early stages of business. And what I mean by personally guarantee is you want to, well, the lenders, they want you to personally agree to repay the debt if the business can't. And that's why maintaining a healthy personal credit is important in your business journey, especially early on in this process, as you start to build out your business credit separately. And when we move on to business credit is a little different, but at its core, it still reflects how your business manages debt and other financial obligations over time. So instead of being tied to your social, business credit is generally tied to your EIN and your DUNS number. So it creates a separate financial profile for the business itself rather than the individual owner. And that DUNS number is exactly why we brought Chris on, because he'll get into some of the nuts and bolts of what that means a little bit later on. But overall, for business credit, the scoring system is very different from personal credit. While personal credit scores can vary across credit bureaus and scoring models, business credit tends to be even less standardized. So business credit profiles or bureaus like Dun & Bradstreet, Experian, and Equifax, they may each evaluate different factors and use different scoring ranges and rating systems. But it's still used to apply for some of those lending products like the business loans and financing and things like that. But they also use your business credit profile to when you are doing business with a vendor or when you're trying to access supplier credit, even when you want to establish business partnerships and contracts. So as your business grows, having an established business credit profile can help improve credibility and create more opportunities to access funding and even build stronger relationships with lenders and vendors. Before we move on, Chris, did you have anything to add for this business credit section?
Yeah, absolutely. So just think of it this way, as a business owner, every time you give out your EIN number, you should be thinking in the back of your mind that there's a possibility that someone could look at additional information. And a lot of those institutions may not even ask you for it directly. They don't have to ask you for your DUNS number because it's public information. They can readily get that information from Dun & Bradstreet. So if you're not aware of your company's basic information, and I know we'll get into some of this later on, but if you don't know what's there, I would highly recommend reviewing your information before applying for anything. Make sure there's no discrepancies, and get familiar or become familiarized with your scores and ratings. I can't tell you how many times we receive phone calls where someone is potentially denied for something and they want to know what's reporting, and it can be upsetting, right? You get an adverse action letter or something like that. And the reason we're trying to educate small businesses on things like this is so that you don't have those things and you can be educated and you can have the additional insights so that the outcomes can be more favorable.
Yeah, very good context. Thank you for that.
Sure.
So the next slide will get into when business credit becomes important. So do you remember that first poll question, right? Just a couple minutes ago where we asked how long you've been in business. And this slide is really a callback to that discussion because the role business credit plays tends to evolve throughout your business journey. So in the early stage, which is where a lot of you are right now, is the first 0 to 18 months. Lenders often rely heavily on your personal credit because the business may not have much financial history yet. And this is also where the personal guarantees are most common. As your business moves into the stabilization stage, which is that 1.5 to 3 year mark, lenders start looking at both the owner and the business itself. So at this point, things like revenue consistency and bookkeeping, payment history, and business financial activity start to become more important in the evaluation process. And then the expansion stage. These are the businesses who are very experienced, comparatively speaking, right? So your business credit becomes increasingly important on its own. A stronger business credit profile can help improve your access to funding, create better financing opportunities, and build credibility with lenders, vendors, and potential partners. So the takeaway here is that business credit becomes more important as your business grows, which is why starting early and building a strong financial foundation can create more opportunities for you over time. Anything to add there, Chris?
Yeah, I think a lot of small business owners that I speak to, they think they have to wait, 2, 3 years before they can actually start building commercial credit. You can start building commercial credit from the day that you have your inception, the day that you file your charter or your articles of incorporation. You just have to know where to start. So recommendations, obviously, once you have your EIN number, you have your legal structure in place, get a DUNS number, get acclimated, go online, utilize our DUNS profile manager, make sure you can authenticate. These are all free things that you can do to get started. And you can always speak to anybody here in regards to your company profile and what goes into it.
Awesome. Thank you for that. And that actually ties in quite nicely to the next slide, which is 4 things you can do this week. So I'm a big fan of having practical takeaways and simple to-do lists. So I wanted to round out this section with a few important steps that you can take this week to help set your business up for long-term success. And the good news is that building business credit doesn't just happen overnight with one big action. It's often the result of small, consistent steps that help you establish credibility and create a stronger foundation over time. So the first thing you can do is separate your personal and business finances. And that means opening a dedicated business bank account and using it consistently for income and expenses. And this helps create cleaner financial records and reinforces the separation between you and the business, which ties in really nicely to the second piece, which is having an EIN number, what Chris just said. And you can use it to establish your business accounts. And your EIN is even required to open up a business bank account. So separating that creates that identity. It helps identify your business as a separate entity from yourself and is often required when applying for multiple business services. And the third is make sure you get yourself a DUNS number through DMB. And this helps establish your business credit profile and is commonly used by lenders, suppliers, and other financial partners to identify your business. And finally, begin building vendor and payment history. By working with vendors that are relevant to your business type, and your industry, and if possible, make sure they report to credit bureaus and prioritize paying those bills consistently and on time, because the positive payment history is one of the foundational elements of having a strong business credit profile. So the key takeaway here is that building business credit is a marathon. It's really important that you start early and you stay consistent, because it can create more opportunities for your business as it grows. So I kind of think you might have some additional items to review there. Do you have anything to add, Chris?
Sure. Well, the first thing is if you look at number one, making sure you have the separate accounts. This is going to make it a lot easier when you go to your accountant. You shouldn't have a Ziploc bag full of receipts, right? You want to have separate transactions flowing through that. The other thing is you can also link your business bank account. Once you have it, you can link that right to your Dun & Bradstreet profile. So if you have cash flow, money flowing in and out of the account, you can do that. And it's something that's very easily done and can impact your scores and ratings moving forward. Number two, if you look at 2 and 3, you definitely want to understand the fundamental differences between an EIN number and a DUNS number. A DUNS number is a unique identifier. It's a universal number. So Dun & Bradstreet supports 225 countries. So if you're doing business not only here in the US, you can also do business abroad. Whereas an EIN number, you can have multiple EIN numbers. Those can be established and shut down. Dun& Bradstreet's never going to recycle a DUNS number. That DUNS number is yours from beginning to end. And then the last piece, the vendor history. There's multiple components of a credit report, but if you ever have the opportunity to take the discount or pay something early, do that. That can also help your report and your scores and your ratings. But reviewing it, I am absolutely shocked in this day and age of how many companies have no idea where they stand, and they're actively going out seeking funding and contracts and all these things. Definitely get educated and start building that history from the very beginning. It's critical.
Nice, nice. I figured you had some additional tips there, so thank you so much for that. So this is actually at the point where I tag you in, Chris. This next section is all about you.
Well, absolutely. It's going to be about the businesses that we're working with, right? So, but yes, factors that contribute to your commercial credit report, right? But the first thing we want to talk about, obviously, is establishing a strong foundation. What does that actually look like? So I know we talked about this on the previous slide. Okay, I have my EIN number. I have my business checking account. What are some other things that I can do to have that strong foundation? Now, if it's relevant to your business, if you haven't done so already, I would strongly suggest getting a physical business location if you can. There's nothing wrong with necessarily operating the business out of the home, but when you have a secondary location, you have a brick and mortar, a factor of risk is whether or not you rent, lease, or own that space. Also, the size of that space. The credit report with Dun& Bradstreet sometimes can impact what you're paying for your utilities, how much insurance you have to pay. So there's other things that your commercial credit report can impact directly or indirectly. The other thing is make sure you have a professional domain, a professional email, professional website. You don't necessarily want to have a Gmail or a Yahoo when you're conducting business. There's something that's said to have, your legal name as part of your name. It's more professional. It comes off better in the marketplace. And the last thing here is business listings. If you drive by someone and you paid $4,000 to $5,000 for a wrap on your truck or your car for your business, if somebody goes online, what are they going to find? Are they just going to find when they drove by you or claiming your branding? Dun& Bradstreet can also help you claim your brands, or excuse me, claim your branding online. We actually have our own online directory that I would strongly suggest. These are things that you can update with Dun& Bradstreet for free, but we also can help you distribute that information to correct misinformation on listings online. The last thing you want to do is spend money on marketing and advertising and direct your customers to another business. So make sure that you're being found properly online and that you do focus some time and energy on your social media, your web presence, and having that done. If you have all of these checked off, now all you have to do is figure out what your target audience is and how you're going to go to market or how you're going to attack that.
Awesome. Okay, so next slide.
Yep. So we speak to customers all the time around gaining access to capital, getting loans. What could potentially be viewed? Well, obviously, I try to view it as if I'm going to go all in a card game, I'm not bluffing. I want to make sure I have everything in order, right? So making sure that my personal credit's in order, making sure that my business credit and all my scores and ratings are in the right place. I do want to make sure that I have a P&L and a balance sheet that are strong. So for those of you on this call that don't necessarily or aren't using the accounting services to its full advantage, do so. Don't just have something as a checkbox. Definitely understand, what you have, right? But personal credit is most likely going to come into play. I know some of you earlier on in the call, we did the survey on whether you're less than a year in business. You might have to use some money from savings. You might have to use some money from your 401k. Some people are working a 9 to 5 before they can make, the business a full-time thing. So lenders might view it as, depending on how you take care of your personal, that's probably how your business is going to run as well. Okay. So the last piece is Application processes. Once you have all of these things in order, start applying for things. Start giving out, your tax ID. Start giving out that information, but also make sure your basic information is correct. The last thing you want to do when you're applying for something is have the address, the phone number, the legal name, the DBA. There's something wrong. It can create unnecessary delays. And if you get denied, no one likes getting an adverse action letter. No one wants to have. Obviously, credit is situational. You probably need it, and it's probably pretty urgent at that point. So make sure all your data is correct across the board.
Question for you, Chris. Since you have a lot of new business owners online, can you speak to what an adverse action letter is?
Sure. So an adverse action letter would be you fill out a credit application, and a lot of these nowadays are using AI, and it factors that risk within seconds, and you get a decision. It's going to give you the reason for the denial and what information was actually used in that decision making. It'll say where the information was obtained from, and usually it'll bring up. Um, it'll talk about the Fair Credit Reporting Act and where you can actually obtain a copy of your information. Sometimes in those situations, Dun& Bradstreet will be listed on that action letter, and we receive those phone calls. So it could be on the consumer side. It can also be on the business side.
Thank you for that.
Mm-hmm. Okay. So benefits and risk of building this foundation. Obviously, in the marketplace, you want to make sure that you appear fundable, that you're reliable, and that's going to be supported by you having higher credit scores. Depending on how much money you need, the more information that these institutions have to make decisions on that's positive. Let's say if you need 50, well, I always tell businesses that I speak to, if you're thinking you need 50, you probably need 100. Whatever's in your head, double it because things come up. More information you have on your D&B that's positive, maybe you can get a larger line of credit, or you can get a larger loan, or you can get a revolving term account with a vendor where they're more flexible, 60, 90-day terms. But at the end of the day, too, if you're just conducting general contracts, sending out RFPs, proposals with other companies, if I look at a report, if you're paying your bills on time, you're probably going to execute the contract on time. So I'm most likely going to trust you and could potentially choose you over someone else. I talk to contractors every day and they say, well, it's the low bid. Well, it's not always low bid. It might be low risk as well. So everything can be viewed, especially this type of information in this type of economy. Now, there's opportunity gain, but there's also opportunity loss. There's risk there. If you have inconsistencies in your information, I might go another direction. It can lead to denials. You might have lower scores and ratings on file. You never ever want to have to explain your information away. It's much easier to provide additional information that's positive than to not know what's going on. That also looks bad when you're working with another company, right? If you have a minimal amount of history, it doesn't look like you're doing a whole lot of operations either, right? So that means others may or may not have trusted to work with you. So you may not be eligible that other entities are eligible for the better rate, the longer term. That's all boiling down to cash flow at that point. So if you think about the funnel you have, the money coming in, the money going out, the better your credit is, the more tight and the easier the money is going to flow in and out of that funnel by having better credit. Last but not least, no one likes delays, especially in business. Time is money. We want to make sure that we make it as flowing as possible. So make sure you have all these foundational elements in place, and you should be in good shape. All right. How do I improve my ability to get funding? Well, I know we talked about it multiple times. You want to try to keep your personal separate from your business. Now, is that going to happen in every instance? And I know there's some people on this call like, I don't want to use my consumer at all. Unfortunately, Dun & Bradstreet, we can only help you build the report. We can't make another third party only base it off of the D&B information. However, what I can tell you is building up your commercial credit does provide you flexibility to shop yourself around. You don't always have to take the terms that are being dictated to you. At the end of the day, those other institutions, they need to make money and they need to conduct business as well. Someone else will work with you. So you have to use it and negotiate. Um, the second piece there, ensuring your information is uniform across all sources, whether that's online directory listings or whether that's within all of the credit reports out there. There are other institutions out there outside of DNB. We are the largest globally, but I would highly recommend looking at some others as well. Um, Experian, CreditSafe. There's other entities, even industry-specific companies that you might want to take a look at. I'm sure you guys could all go on Google and go down a big rabbit hole with that one, but for all intents and purposes, start here first, okay? Um, when you're setting up accounts, it's one extra question. Ask them who they report to. Do they report to anyone? So if they say they report to Dun& Bradstreet and that account is meaningful to your business, go ahead and set it up and then find out what their reporting schedule is. If you have the opportunity to take a discount, pay in advance, or uh, if you just have the cash flow to pay on time, do so. That's going to help some of your scores and ratings moving forward. If you don't have well-kept financial records, make sure you make sure you do. I used to be a small business owner myself, so I had a folder and I also had an accounting firm that I used. You learn after you get audited once. That's all it takes is one time. But at the end of the day, monitor your company's credit report. Understand what your scores and ratings mean, and what the key factors are in those scores, which we're going to get into here in a minute. All of those things will make you appear to be more fundable.
And the keep your financial records well organized and accurate, that would be where Vyde comes into play.
Correct.
So that would actually
That goes
be
without
our
being said, you know what I mean?
Yeah.
So I'm going to assume they would know that one being on this call, but I didn't want to take away your thunder.
No, that's okay. We make a good team, DNB and Vyde. So we go to the next one here. Oh, and we have another poll. So another poll, and it's all about what your biggest challenge is. So what is your biggest challenge when it comes to business credit or funding? So we'll leave this up as you review the questions. A, I don't know where to start. Or is it B, separating personal and business finances? C, getting approved for funding? Or D, building business credit history? Or E, understanding what lenders look for? We'll leave this up for a minute while you all respond. Thank you so much for participating. We see these numbers going up.
I'm actually really intrigued.
I am too.
I want to see if this matches what I hear every day.
Numbers are still changing. Okay. We're slowing down. We'll give it a few more seconds. Okay, so I think we have a consensus. Where are we? It looks like this is it's a tight one, right? So we have building business credit history is a challenge, as well as, wow, you don't know where to start. Okay, well, hopefully some of the things that we've covered so far can help you out in terms of where to start, right? But we'll definitely be following up via email with some tips that cover some of those topics listed here, right? So we can go ahead and end that. I'll stop sharing and okay. So let's just X out of that. Danielle, let me know when we're ready. I'm just going to X out of it, but let me know if that works on your end.
Yep, we should be good.
Okay.
All right, cool. So then the next slide is still Chris monitoring key credit scores.
All right. So before I go into these particular scores you see on the screen, I just want to preface with there are different scores and ratings for different audiences. It's not just one score when you're talking about commercial credit, right? But in terms of loans, lines of credit, things that are revolving, a couple of the scores you're going to see here on the screen. We have what is called a failure score, or our financial stress score is what it's known as, or our delinquency predictor score. A failure score basically is going to determine and tell the audience when they're running a report, what is the likelihood of you going out of business over the next 12 months and due to financial stress? All right. So think of that as more of a predictive indicator. And some of these things within the scores that we'll go into and what impacts them, it's not just how you pay your bills. There are numerous other factors that go into that. The one on the right, the delinquency predictor score, this is what is the likelihood of you being severely delinquent, 91 plus days beyond terms? What's the likelihood of that happening over the next 12 months? So if you think of it in terms of the audience making the decision on you, obviously we want to make you look as good as we possibly can across the board, but depending on the type of credit, that's the scenario, you want to be well versed in all of these.
You know what? Would you mind? There was a couple questions that came through that are pretty
Sure.
quick. I think we can answer them now. So one is from, let's answer this live. One is from Patricia. She asks, how do you link your business finances to the DNB website? Is this a more involved answer or is it a quick
No,
response?
I'll try to answer it from a high level. So updating any basic information, if she's just talking about updating like a sales figure, she can do that through our Dunn's Profile Manager for free. Okay. If she's looking to upload a financial statement, profit and loss, balance sheet, that can be done for free as well through Dunn's Profile Manager. If she's talking about uploading actual like vendor and supplier statements, that is a paid service that Dun& Bradstreet provides. That's all done through our Credit Insights suite. So you might want to check that out online.
Thank you. And then another one from Victoria. She asked, is there a list of vendors that do report to DNB?
So there is no list, so to speak. I mean, many moons ago, like when I first started here, there was, but there's not. The thing is this, I want to it doesn't necessarily matter who reports. What matters is the account important to you, and are you getting credit for what you're already spending on paper? Those are the services we provide. So what I would encourage you to do is go see what's on your account for free. Look at the history that's there. Whatever you don't see there, Dun& Bradstreet can always partner up with you to collect that information and get it to your profile. If you want to find out more about that, once again, you can always reach out to one of my agents. You can reach out to myself. I can always go over that information with you.
Thank you. And then another one from Natasha. This will be the last one before I pass it back over to the presentation. But does does a business credit card from Bank of America help build payment history for DNB?
Bank of America is one of Dun& Bradstreet's partners. If you have a credit card, Dun& Bradstreet is also partnered with the Small Business Financial Exchange. So now I have to answer this kind of, I have to be compliant when I do this, right? I can't disclose who reports and who doesn't. Okay, there are NDAs involved. You can't disclose certain things without permission of the company that's sharing data with us because it's just how it goes, right? Above my pay grade. No. But what I would do is I would ask them if they do report. If you don't see that information there, they might be sharing information potentially within the Small Business Financial Exchange Network. That's a consortium of banks that share data. We are partnered with them. We actually have a score that we generate. And if you go to Bank of America's website, you might be able to find some additional information about that. So hopefully that helps.
Thank you. Okay, over to the next slide, delinquency predictor.
Okay, so this particular score, and understand with Dun & Bradstreet score, there's going to be scores and there's classes. So there's actually a delinquency predictor score, and then there's a class. The score goes from 101 up to 670. So you want a high score and you want a low class. The class is 1 through 5. What are the benefits of having a high delinquency predictor score? Well, if I'm put yourself in the shoes of a lender, right? If I can see that, okay, you're doing well comparatively to your peers in your industry, you don't have high utilization, you don't have any now-owes, you don't have any past due, you don't have any suits, liens, or judgments, that could potentially lead to faster approvals, more confidence in getting higher limits from various lenders, and also improve cash flow. So there are similar benefits to all of these scores and ratings, but at the end of the day, it all depends on what the viewer values and what that relationship is. So if you can keep that really, really high, shop yourself around. To me, in my experience, this is more bank, credit card, loan, revolving line of credit related. So the risk of having a high risk score, you could have a line of credit today. I've seen it happen where someone's in line at a store with supplies and we get the phone call and their line of credit was cut and they didn't even know because of a various score and rating. Companies change their credit policies all the time and they establish that relationship with D&B where even the decisions can be automated. So it can limit access to your credit. It can require you to, you might be penny pinching a little bit. It might hurt your cash flow and you might have to pay in full up front. And then there's also the negative perception in the marketplace. If you don't look good on paper, regardless of the experience they might have, some people live and die by this kind of information on a regular basis. So just be aware of that. So factors affecting the delinquency predictor score. How can you, it's going to vary by industry. We do use economic data, but my advice is pay your bills on time or early. Make sure you're monitoring your scores and ratings and checking for any errors, not just with DMB, but with other institutions as well. If you do have any issues, the worst thing you can do with a creditor is not communicate and not answer phone calls, not answer emails, not respond. If you have an issue, work out some kind of agreement. Try to pay it off as soon as you can. But line of business, age, location, all these things can influence the report. So and your scores. So you can do those things. Hopefully, you can stay out of trouble.
This is actually very relevant to a question that came through from Kathy. She asks, how do you clean up your business profile on DMB?
Simple. It's not only clean up, it's also continue. I would more or less call it continuous maintenance, right? So the free Duns Profile Manager allows you to go in. You can update your name and your address and your phone number, and if you see negative items like slow payments, you can place rechecks for free. You can upload financials for free. That is all. When someone says clean up, you can do that. We also have our digital service center, which is service.dnb.com. You can go there. You can submit requests to our iResearch team where they'll investigate various things, whether it's UCC filings, a suit, a lien. If you have releases, documentation, that team can also help. Now, if you absolutely don't have the time, you're like, Chris, I don't even have the time to be on this webinar right now. I should be go driving revenue. We do offer professional account management services here at Dun& Bradstreet. If you wanted to outsource the management of that, we can take the keys to the car. We can actually manage the data for you from A to Z. So whatever it is you need done, you have your free option. We also offer professional services and self-management services as well. Okay, failure score. Once again, 1001 up to 1875. Keep in mind there's also the class as well, 1 through 5. If you take a step back, especially now, businesses, some businesses are struggling right now. Some businesses are closing, but with that comes opportunity for other businesses to emerge. The benefits of having a really, really good score, it gives the audience peace. Hey, you know what? They're still going to be here a year from now. So let's say you're trying to establish a long-term relationship with someone. You want a 3-year loan, a 5-year loan, a 7-year loan, something that's longer in duration. They're going to have more confidence seeing a higher score than seeing a lower score. So, and which obviously less interest, more time to pay. You may not be under the constant financial scrutiny that you'd be under if you had a higher risk score. But the last thing you need, especially after, I mean, I experienced it, we all experienced it coming out of COVID. Supply chains are extremely important. So making sure that you're giving your good signals to companies that rely on you for purchasing their good product or service, better that the score is, it's really, really going to help moving forward. Obviously, the risks of not doing so, struggling to gain access to capital, not necessarily getting trade credit the way you need, paying cash for everything. You're going to pay more money, and if you are borrowing anything, they're going to be more expensive dollars. So uh, companies might avoid you entirely. It depends, guys. So whatever you can do to control that narrative, control the controllables, and we do offer tools to help you do that. Financial statements, making sure that these financial statements, your receipts, everything, you're keeping strong financial records. Obviously, that's why you're working with a professional company like Vyde. Make sure that you guys have all your accounting. You'd be surprised. I talk to companies all the time. Well, I've been in business for 3 years, but I haven't filed my taxes yet. You might want to do that. So, and you might be missing out on some some refunds there. So get those filed, right? Legal filings. If you have a suit, a lien, a judgment, if you have older UCC filings, address those things. You don't want to have to explain that when you're going through a lending process or opening up a new account or going through a contract negotiation. Last but not least, make sure that you have some type of cash reserves, you have some type of savings. Things happen. You don't want to run your accounts all the way down to zero. Make sure that you have your accounts also that are showing that positive cash flow linked to your credit report. Doing so can influence both of these scores that we talked about in just one business day. We are partnered with Plaid, by the way, so you can do that at no cost.
Question for you. And it's really about the impact that your business credit profile has on the partnerships and contracts and vendor relationships, right? Even outside of the moments where you're asking for funds or when you're actually, when you want lending. How does your credit profile come into play in that scenario where it's like you're wanting to work with someone and it's not necessarily like you're asking for a loan, but it's just business?
Well, think of it this way. Let's say you were going to engage in a contract, and that's a great question. We have companies that call us every single day where they're being asked for a copy of their credit report to include in a proposal. So if you're in a competitive landscape, even if you're a niche business, there's only so many companies that might do what you do, or it might be hyper competitive. This is a way for you to differentiate yourself from your competition. If you're heads and tails above everyone else, I always tell customers, nowadays you're gonna get quality service and you're gonna get great pricing, but outside of that, what makes you different? It's the experience, but it's also what's on paper and what's been verified. Dun& Bradstreet is a trusted source of that information, and it's been that way for 180 plus years. So that's why companies come to D&B. So that's where that impact can be. Um, it's almost like icing on a cake. Think of it like a cover letter on the resume that you're already providing. That's really what you're doing when you're providing that type of information.
Gotcha. Thank you.
Mhm.
On to leveraging your reliability.
All right. So if you are trying to leverage reliability, what does that really mean, right? What does reliable mean? It means consistency, it means that you're going to be around, right? So where does commercial credit come into play for that? If you're trying to scale a company, you're trying to go from one business life cycle to another, business credit can help you get access to capital so that you can grow. The importance of commercial credit, it's so that others can mitigate the risk that they're taking on you. But even think of it on the flip side. There are decisions that you make as a business owner every single day that could make or break you, right? Taking on a new client, sending out a large order, sending out a lot of inventory. You can also put a credit policy in place yourself and start assessing other companies. We provide solutions like that. So if you look at your average days outstanding as a company, and you're like, man, you know what? That's starting to creep up a little bit. You might want to put some type of policy in place where you can check credit on others. But the better that you look, the stronger the report is. These are good signals for the long term. And if you're ever going to sell the business, or if someone's trying to evaluate you in a financial situation. I have family-owned companies I talk to on a regular basis. They're like, "Oh, I'm looking to pass this on to my son or my daughter, or my even grandparents, grandson, my granddaughter." the better that this looks. If they sell the business or if they hand it down, uh, there's value there. They're inheriting those relationships that you've built over the years. So if you can get that to paper, even if you want to sell the company to another third party, you're only helping yourself and increasing the value of that business to be lent to, or even if you're trying to get out of the business. So just some food for thought there.
Learn
Okay.
from business.
Yep. So leveraging commercial credit, it can help in a multitude of areas. I always tell my agents out there on the floor, you have to cover with business owners cash flow, the cash flow funnel, money in, money out. If that dies at either end, you run into roadblocks. So the commercial credit report comes into play. If I need an influx of capital, if I need a higher line of credit, that could be to satisfy demand for orders that are being placed. If you need that, the better your scores and ratings are, the stronger the information, the higher the line. If I'm trying to also think of the cash flow funnel again, if I'm trying to cut costs in other areas, I mean, think about the pain we're all feeling at the pump right now. I never thought I would ever be paying what I'm paying to drive a four-cylinder single turbo car. It's crazy right now. I'm like, I look at the pump, I almost stop. I'm like, are we serious right now? Any chance you can put money back in your pocket, guys? Um, Shop yourself around with different insurance carriers. Even some of you on this call that might need to be bonded to various projects, the better your report looks, the less money someone might charge you, or it gives you the ability to negotiate. Earlier in the call, we talked about we had the poll on where you guys are at. If you're trying to have somebody invest into your company, would you want to make an investment into a business that was struggling or a business that was not doing what they're supposed to do with the funds that are coming in, or something that was more viable on paper? Well, of course, you probably want something that's more viable on paper. So if you're trying to attract investors, have people invest into your idea, most businesses have an amazing idea because they've worked in that industry to some degree. That's how I got started. I just thought I could do a better job than my old boss, right? Um, but end of the day, no matter what it is, any process or procedure internally as a company, the better your credit is, the better the outcome.
Okay, so it looks like we are at the end of the webinar. We're happy to take some questions, and then the final piece would be just the survey to see how you all felt about the content and us as presenters. So let me see what we have. Uh,
Drum roll, please. No, I'm kidding.
right. Let's see. So we have from Marisha, it looks like. To build a reserve cash flow, can you open an online savings account that gives you a percentage yield?
Would I recommend doing that?
Mhm.
Of course. I mean, obviously, if you have the liquidity to do that, um, there's a couple things that you could do there. You could take that money. You could also get a secured card too. You could take that money and you could put it in the bank and you could probably borrow against that. So if you're looking to get a starter revolving line of credit, try to do it in your business name. There are plenty of companies out there that will match what you've made as a deposit and give you a credit card to start out. So you can either keep it in your savings or you can put it to work right away. Some of those third parties may also report to a bureau. So you can kind of kill two birds with one stone. Take the money you have, put it, get a revolving line of credit off of that, and then start using that line of credit for things that you need for your business. Like we talked about, all the fundamental pieces in the beginning. If you don't have a website, build one. If it's not optimized, make it optimized. If you don't have your listings claimed, make sure all your information is correct before you go to market. So, or if you're trying to reach another target audience, there's so many things you could do there. That's a really good question, though.
Mhm. Okay, and then we have one from Kathy. Again, she's asking, does DMB collect the same business information as other credit bureaus or other sources like nav.com?
That's a great question. So Nav is also one of our partners. Nav actually has access. We license one of our scores and ratings for them to use. That's the DMB Paydex score. That is what is known as goes on a scale of 0 to 100. 80 means that everything's on time. For every point you're above 80, That means that you're taking the discount or you're paying in advance to some degree. Anything below 80 means there's some element of slow payment. But as far as that relationship goes, they do offer other services as part of that. So you can see some scores and ratings, not just from D&B, but from some other third parties. In terms of working on your D&B report, um, I'm glad that you're taking a proactive approach and you're doing research. NAB does a great job at promoting themselves online. But in terms of building up your entire D&B portfolio, they wouldn't be able to help you there. We would. So good start as far as the other data is concerned. It just all depends on where you're at. I mean, you're going to pay a subscription to them, and that information can potentially get to various reports, but I'm sure there's other things that you're paying for that you're not getting credit for. So just be mindful of that.
Okay, and we have a question from Wayne. He asks, does a DNB number help with getting registered with sam.gov and getting veterans service disabled certifications?
It's a great question. So a few years back, it used to be required to have a DUNS number to do any type of work with the government. Now the government uses what is called a UEI number, which you still might need a DUNS number, and then they'll take your DUNS number, and then when you go on sam.gov, you'll take that number and you'll convert it to a UEI. So you can still do that. However, as far as you being listed we can mark it on your DMB report and have it checked off. It's a free update to be listed as veteran owned. If you're considered minority owned or woman owned, these are all designations we can put on the report. So if you're trying to get various grants, or if you're trying to get certain jobs that require that, yes, a DUNS number would be helpful, but there's a process involved. So, and all of it's free, by the way.
Okay, and Carolyn, I see your question here. It's multiple questions, so I'll try to get to I'll get to one, and then we'll reach out to you personally to answer some of the rest of them. But
Sure,
the
that's fine.
one question that stands out is if like personal credit, you know how inquiries can affect your personal
Mhm.
credit score. Is it the same for your commercial credit, or if you apply to more than one or two vendors, do those hits impact your business credit score?
So inquiries do impact your commercial credit. However, Dun& Bradstreet can disseminate the inquiry type. So think of it this way, right? Um, there's Dun& Bradstreet uses statistical analysis in their algorithm to determine where somebody might fall from a risk standpoint. Okay. So let's say in the industry average is 3 for the industry that you're in. Okay. If you're above or below that, that can influence the scores. But we also take the inquiry type into consideration. So the difference here is you can't control when an inquiry takes place because the way I teach small businesses, an inquiry in my world might be just general business information. It may not be a credit request. So now, if you're going out there and you're, getting your credit slammed and you're just trying to get whatever's out there, yeah, that's going to be one of the factors that influences the score because it looks like you're seeking credit and you might be in trouble. So it is similar on the consumer side. So, but if it's just somebody that's interested in working with you, that's why we break it down, and that's why we always advise monitoring your credit so you understand when it happens, what industries are requesting your information, and the inquiry type.
Thank you. And we'll take the last question before we go into the survey. It's from
Sure.
Shell Allen. And they're asking a few, but they're really good questions as it recaps some of what we discussed. She's asking, is a DUNS number required to build business credit? That's the first one. The second one is after you've established your LLC, how soon can you apply for business credit? And if there's a list of companies that will approve new business owners. So quite a few.
Okay, so the first thing, do I need a DUNS number to build business credit? Um, I would recommend it. I'm not saying it's required though. Could you go to a company tomorrow and fill out an application and then give you a business loan? They could. I'm not that third party. What I can tell you is that it all depends on how you're securing it, right? Like they might, if you own a house, they might ask you to secure it. Now your personal finances are intertwined. In terms of how quickly can you build commercial credit or apply for a loan, um, I would make sure that you have stable cash flow as an LLC and you have consistent customers coming in before you go into a bunch of debt. What a lot of businesses do is there's a lot of misinformation out there where I have an LLC, wait 30 days. Trust me, I've seen every podcast, every wrong thing online. It's actually quite amusing. It's hilarious. It
Yeah.
doesn't make any, if your company hasn't made any money yet and you've just started, why would I lend to you? There's no proof that you're making any money. It doesn't make any sense, right? Now, um, is that to say that somebody may not start you off with something small like you were when you were 16 and you got a car for the first time? You didn't start off with a Ferrari. You probably started off with a used car like I did, and you had to fix it all up and make it nice. But anyway, that would be my recommendation there. You can try, but I would build some history first and establish the foundational elements we talked about earlier first.
Thank you for that. And then the last one, I'm pretty sure I know the answer to this, but she's asking if we have a list that are at least more likely to lend to some of the new businesses or newer businesses.
I mean, honestly, it's not necessarily a list, but I mean, Dun and Bradstreet, we are partnered with a ton of companies. So what I would do is I would definitely recommend checking out some of our partners and seeing what they have to offer. Um, a few of them have been mentioned in this call, right? So it all depends on what type of credit you're seeking, what you're going to be using it for, and how much you need and the overall impact that's going to make, right? Um, but yeah, like the majority of major banking institutions use DNB as part of the process. So you have a multitude of options out there.
Awesome. Okay, so thank you so much for submitting those questions. We just have the last piece, which is a survey. Danielle, can you help us get that up and running to close us out?
Let's see.
The survey will pop up automatically for anyone who's attending the webinar. Just stay on,
Nice.
and once we close it out, we'd appreciate you just taking a few minutes to fill that out.
Awesome. Well, thanks again for joining us today. We really hope that you found the information helpful. And for all of you, if we didn't get a chance to answer your questions, like I said, we will reach out to you via email and we'll have a recap of some of those questions along with helpful resources like how to get in touch with Chris and his team for some of those DMB specific items, and then other helpful resources that will address where you were in your business journey and some resources to help you solidify that financial foundation, okay? Help you get to where you need to be from a credit perspective and otherwise, right? So thank you so much for joining us. We will talk to you soon and be on the lookout for that recording of the webinar that you'll get in about a day, okay? Give us 24 hours and we'll get that out to you.
Sounds good.
Thank you all. Have a good
Thank
rest
you
of your
guys. Have an awesome day. Good luck with everything, guys.